Hello and welcome to this lesson. So in this lesson, we're going to look at an example of this trading strategy. So basically, I've outlined here the steps that generally you want to follow when you're formulating a setup, or maybe you want to outline a potential setup in your own charts. So basically in this example, I'm going to show you a breakdown of this setup. We are going to be using the 5 minutes for our entry. But before then, let's look at some of the elements that need to come together actually for this setup to align. So I'm watching the Euro USD 15 minutes chart. And the first step that I'm outlining here is that you need to basically outline a higher time frame key level. So in this example, our higher time frame key level is actually this daily high. So if you can see, this is Thursday. This is the beginning of Thursday's trading. This was the highest high that was created. And then entering into Friday now, we are seeing that high being taken out here at 8 a.m. New York session. So I'll outline this as our key level. This is actually our key level. Stroke daily high. So this daily high is actually Thursday's high. So when the market opened on Friday, you can see actually from the opening, the market started moving higher towards those daily highs as our key level. And also keep in mind that apart from this being our key level, there is also a level of liquidity. So we want to see liquidity either taken out during Asian, during London Open, or New York session. So basically you want to see liquidity being taken out before these setups, before this setup actually begins to form. So this key level could be anything from a daily high, a fair value gap, an order block. It could be anything of those things, but in this example, it's a daily high. So when the market comes and takes out that daily high at 8 a.m., you can see this is 8 a.m. So this was at 8 a.m. Sorry. This is 8 a.m. New York session. So this is the beginning actually of New York session. We see that the market comes and runs that. So that's why I've always thought that the time is very critical, because you can see the specific time that the market comes to take out that liquidity or that high or hit that key level is during the New York session, which is 8 a.m. Then after we hit that level there, you want to see actually the market now starting going in the opposite direction, breaking market structure. So in this 15 minutes chart, we are seeing that maybe even before you see the break in market structure, for you to confirm actually that you can see point number 3 says that London Open or New York, either London session or New York session, creates high or low of the day. But before even you know that that is potentially the high or low of the day, you can see after the day closes, we can say that this is the highest high that was created in this day on Friday, making this the high of the day. But the break in market structure essentially is what will indicate that that high is now potentially the high of the day, and you want to now trade in the opposite direction. Basically, you want to sell in that market, because after this break in market structure, the market now indicates it wants to move to potentially these targets down here, and maybe eventually those lows down here, which I think it did not get in that day. That day ended actually without that low being taken, but we have this level of liquidity here that I think we can outline as our potential target. You can see this was the initial low of the day. When the market opened here, this was the lowest low that it had created during the London session. But when the market went up, it came aggressively lower to take out those lows. So this is London's low as our potential target. So we'll just label this as target. So when we drop to the 5 minutes chart, you can see also there's another target here. We'll get even more clearer targets of liquidity when the market is moving lower. So basically, we will now drop to the 5 minutes chart to look at this example in more detail and how we could have executed in the 5 minutes chart. So let's drop to the 5 minutes chart. This is at on Friday, 15th of November. So this is our setup example right here. And already you can see in the 5 minutes chart. So this is that key level that was hit at, it created the high at 8:10 a.m. So we can see a more clearer breakdown of that high. Then after taking out that high or this key level at during New York session, so if I turn on maybe the kill zone indicator, You can see actually this is within the New York session. So all this happened within the New York session. So basically during the New York session at 8:10 a.m. we created the high. Then the high was confirmed once we had that break in structure. So at 8:30 a.m. we confirmed the break in structure even in the 5 minutes chart, coupled with the 15 minutes chart. So basically this 5 minutes entry, which I'm going to demonstrate here, is going to show us how we could have executed. So you can see there's another level of liquidity here and here. So maybe I can outline those as targets. We'll see if those will act as our objectives or not within that 5 minutes entry idea. So basically once you have that break in market structure, so we are saying that once you confirm that break in market structure, once the break in market structure is confirmed, after that liquidity is taken out and we have hit that key level, you want to now watch for a break in market. Okay, we have watched for a break in market structure. After the liquidity run, we have seen the break in market structure. Now our entry comes in when either we create a breaker or we create a fair value gap after the break in market structure. And you can see in this example here, we have a fair value gap. We also have a breaker here. So the breaker here is we have this movement down. So you can see the market moved down and then it went up to take out those liquidities. So if you actually outline, we have the breaker here, but we also have an imbalance right here. So let's maybe outline the imbalance, which is more clearer. So if I outline that imbalance right there, this is our fair value gap actually. This is a 5 minutes fair value gap. This is a 5 minutes fair value gap. So this is what you're going to use for entry. So once you have seen that break in market structure, you want to look for either a breaker or a fair value gap that the market will retrace back into for your entry. So you can see within this fair value gap, we can take a short position. So we can take a sell when the market comes to the low of that fair value gap, the bottom part of that fair value gap, and then we can place our stop loss on this candle here, the high of that candle, which forms the fair value gap. We can place our stop loss above it. So you can see it's about 16.8 pips. And then you want to target now, the first target of course is this, but keep in mind that if we are to target that as our first area to take partials, it has to be at least more than 1 hour. So I'll say that this is a very good place of taking partials. So you can take partials here. Take partials here. So once you have taken partials, your final take profit should be the next level of liquidity, because that is the London's low. You can see this is actually before London, just before London's open. This is 1:20 a.m. You want to actually aim for those lows, because that's the nearest liquidity that the market will reach into, because the market was in this day it was bearish, but then the market initially started creating this low and moving higher just to take out that liquidity, hit that daily high, and then immediately reverse. So basically the ultimate target, the most high probability target will be this low down here. So you can see actually this low was taken out at let's see, this is at 9:35 a.m. So this is our ultimate target, remember. So this is our take profit level, and we're getting about 2.3 R. So I'll say that this is a final TP. So within this final TP now, remember to take partial just before that final TP. So right here, you can take about, on this liquidity levels here, you can take about maybe 50% of your position, remain with 50%. So when I say 50%, let's say if you entered this trade at maybe 2 lots, it means you can take off 1 lot when that target is hit, and then the remaining 1 lot you hit for the final take profit level. So as we said, you also need to keep in mind that when we hit 11 a.m., which is around there, that is also another area where you can use time now to exit your positions. But make sure that at 11 or maybe up to 12 noon, you have exited your position. You can see actually how the market started retracing higher from 11 into 12. So basically, if you have not taken off your position, then the market will have cut into your profits. So basically that's what you want to go for. So make sure that you're aiming for those low hanging fruits, and make sure that you're not over targeting. So this is a very good, easily achievable target, and you want to make sure that you're using this format of liquidity targets to to basically exit your positions, because those are the easiest targets that you can get in the market. Don't aim for anything beyond what the liquidity is showing you, basically because if you want consistency in your trades, if you want consistency in hitting your targets, just make sure that you're keeping your targets very low hang, and you're keeping them very near price, because use liquidity actually as your target objectives. And then of course you can see by the time we get here it was 1.3 R. By the time we're getting to the final take profit, it's about 2.32 R, which is very good when you can consistently get such setups. So basically that's the example breakdown, and you can see actually our entry came in at 8:45 a.m. So we said that you make sure that you're entering during London or New York session. So in this instance, this example is a New York session example. So basically that's it. That's how this setup looks like. We'll be looking at more examples so that you can get more familiar with this strategy. So thank you so much for watching. I'll see you in the next one.